Welcome back to Your Average Investor. Today we've got an update on Crowdstrike Holdings. It's in a really interesting spot now. As you can see, the price of Crowdstrike is starting to approach this longer-term support resistance level around the 225 to 230 range. I mean, I'm not going to try to call this to the dollar, but I am going to say that this sell-off looks like it's probably coming into an exhaustion point here. I wouldn't be surprised to see a little bit of a base and then a strong reversal soon. And I might look at entering a position soon as well. We'll see. I haven't entered anything yet, haven't committed to anything yet, but it is starting to look interesting. You can see here that since the little bit of a mishap a couple of weeks ago, we've moved from about $380 a share all the way down to $229 or $230 a share today. Now, part of the reason for the most recent drawdown from 260 down to 230 is Delta Airlines announced that they are going to be seeking damages against Crowdstrike for the IT outage, as it caused them a lot of lost revenues due to flight delays, etc. And it was, as Crowdstrike admitted, a mistake on their side. It was not a cybersecurity attack. It was something where they pushed out faulty code. Now, what does this mean? If Delta Airlines manages to win money, probably there's going to be a domino effect of other companies who are affected that start going after Crowdstrike for compensation. And if that happens, well, there's probably not a lot that Crowdstrike can do to stop it, and it could cause a huge disruption in Crowdstrike's ability to continue operations moving forward as people leave to other competitors, and Crowdstrike struggles from lost revenues on top of having to pay out damages for what happened. So I am a little bit skeptical about entering in on a long-term position on Crowdstrike. It may be a good idea to look at some other cybersecurity companies, though. Now, if I were to play this today, what I would probably look at doing is selling some put spreads. And again, this is not financial advice. This is just me looking at this and thinking, hey, you know, what could I do here to make some money? You're going to have to do your own research and make your own decisions. But if you look at the long term, right, this goes back, this chart now, back to 2019. So you can see 2019, Crowdstrike was trading here at about $55 to $60 per share. Had a nice surge through 2021 up to about almost $300 a share before selling off to $90 a share, and then this latest surge from 90 to almost 400. So I like this as a potential bounce, but I don't like it a whole lot because I could see a potential for a move back down into this like 200 to 150 range, maybe ranging right in the 175, just chopping in the middle. So that's where I'm a little bit skeptical of this support area here, because even though there was some evidence of support back here, it did trade below for quite a bit recently, and so I wouldn't be surprised to see some sort of move back down. Now, you know, with the big sell-off, I think though there's going to be some sort of relief rally coming, and so that's why what I would like to see happen is some sort of base start forming. It's kind of like what we saw here, right? There's a base kind of started forming. New news comes out about Delta, causes a big downturn again. So I'd like to see the same thing, a couple of a day base, and then maybe I'll enter a position with some put spread. So just so you can see what a put spread would look at, like let's say I was pretty confident that it's not going to drop below $200 over the next 31 days. I would sell this put 200. I would buy this put 195. And now, by the way, this is a terrible example, and I'll show you why, because the risk reward is skewed not in your favor. So this gives me a credit of $60. So that's my max profit on this is $60. It basically says as long as Crowdstrike is trading above $200 per share over the next 30 days, you get whatever this credit is, $57, $60. However, you'll notice, whoops, I'm in a view only account right now, but the max loss for this trade is $443. Or $440, you know, depending on where it fills at. And the reason why is if Crowdstrike trades below, say it goes all the way down to like 175 per share, you do have something that caps your loss because you've purchased this put. But because you sold the put 200, what you do is you take the spread here, right? That's a five-point spread, so $500 minus the credit, that'd be $440. That's your max loss. So the risk-reward ratio is just terrible, right? $440 divided by 60. It's a 7-to-1 or 1-to-7 ratio. For every $1 you might win, you could potentially lose $7 on that play. So again, not super confident in that in the options play. Now, if you get a little closer to the actual strike price here, you can see that the credit becomes quite a bit nicer. Now we're getting almost $200 credit. So you're getting closer to a 1-to-1 risk-reward ratio. What's interesting about this to me, though, is that it seems to be that the options market is pricing in a bounce. And you can actually see that here in the difference. See, we're sitting right in the middle of this here at about $228. So these put 225s have a 13 to 15 bid-ask spread, and the put 230s have a 14 to 18 bid-ask spread, 14 and a half to 18 bid-ask spread. So the calls are significantly more expensive than the puts right now, which, you know, in my mind, that's saying the option market is pricing in some sort of rally over the next few days. Another thing you could look at if you wanted is the max pain chart. There's a really easy way to do that. Let's see. Let me pull this up here. Max pain swaggy stocks. Here we go. Oh, ad blocker wants me to update. Okay. So here's a good little website. You can go swaggystocks.com and then go to the max pain. Where's the max pain options? Max pain calculator. You can read about max pain theory if you want. But basically the way that it works is it says based on an expiration and based on the current open interest on options, what's going to cause the max pain? In other words, where are the maximum amount of options going to expire worthless? So you can see today for SPY, it's saying the max pain is here at $546 per share. So if I look at SPY, SPY is currently trading at $540 per share. According to max pain theory, that would suggest that we have a rally before the end of the day that causes SPY to end right here at 546 because that's where the max pain is on these option expirations. Now, it doesn't always work that way, and you can actually see historically right here the stock price versus the max pain strike, and we can pull this out, right, 3 months, however long you want. So you can see it tracks okay, but it's not perfect. And so it's just another indicator that you can use. It doesn't necessarily mean anything, but it is interesting, and I like the theory. So we're going to look at Crowdstrike, and I'm going to look at 31 days out, which is going to be these 8:30 expirations. And you can see the max pain right now puts this at $280. And I think that's what we are seeing here in the options market for, if I go back to CRWD, Crowdstrike, is that the call options are priced significantly higher than the put options, suggesting that we're going to see some sort of relief rally. The reason I'm not totally convinced of this is because today we have new information based on new data that came out with Delta, right? So anything that was happening yesterday is kind of invalidated based on this new information. And so I'd like to see a few days for the options market to start buying and selling and placing their bets, and then what would probably see if we go back here and refresh this in a few days, I'll bet you this max pain number drops closer to maybe $250, maybe $260. And so that's why I'm going to wait for now. But it is looking really interesting. I mean, today we're down almost 12%. And you can see this steady drop. Another way that you could look for some potential moves here, this is something I'll sometimes do as well, is I grab like the closest to expiration option contract that I can. Or sometimes I'll go like a couple weeks out. But usually I'm just looking here. And I want to find something with some pretty high volume. All of these are pretty decent. So maybe I'll just map this one right here that's just a little bit out of the money. And I'll just keep this on a watch all day. I'll put this on a 1-minute chart. And what I want to see is I want to see a sudden surge of volume in the contracts that would suggest a potential temporary at least, move back up, right? So if I see, like right now, this is looking interesting. It's not a huge surge of volume, but it is some where you see these big 140 purchases, 130, bunch of contracts being purchased here. And if I saw another surge accompanied with a little bit of a move back up, that might be something where I try to play the wave on the move back up for Crowdstrike. So that's it for today. Thanks for watching, everybody. Hit that subscribe button if you haven't already. We'll catch you next time.